Hi everyone and welcome back to today's morning report on Thursday the 2nd of July with me, Richard Perry, market analyst at Handtech Markets. Moving on to cable for sterling dollar, and we've had this continued correction on cable. You've seen the move break down. You had this consolidation range of about 130 pips actually for about a week above 156.65. And that broke down yesterday decisively with a closing break. So that sort of implies 130 pips measured down to the downside, which gives you around about 155.35, which is not certainly without the realms of possibility. Looking at the momentum indicators, certainly the deterioration in the stochastics accelerating lower, MACD lines crossing over, and also RSI falling away. Pretty much everything is pointing towards a continued correction. I think it's a correction back into a support that I think is going to form a new low. I don't think it's going to be a big correction, that new low I think is going to come around 54.50 area, which was sort of the old key low from May, and then that reaction high from early June that's left the support there. Now let me show the hourly chart, because that shows you first of all the breakdown of the range that I've got here between the red and the green support, 56.65. That old support becomes new resistance, so bear that in mind today. But also I've just stuck in the Fibonacci levels of this big bull run. Fibonacci levels of the bull run coming in, and they will also, I think, provide some interesting levels to watch out for. So on the downside, that gives you 55.58, which is again very close to that target of 55.35. Also, the first support comes in around 55.40. So again, that is sort of a confluence of factors that are suggesting that we're going to be coming back towards that target, I think, of that breakdown range. Also looking at the hourly moving averages, all negative, and also just bearing in mind that within the old range you had the resistance coming in at 58 figure, and that was because it was old support, so that becomes new resistance. And again we've got the old support at 65, so 56.65, and that becomes your new resistance that you need to watch out for. Momentum indicators just unwinding slightly from a bit of an oversold position, but again that RSI on the hourly chart continues to fall over around the sort of 50s mark up towards 60. So if you see that RSI back towards 50, I think that could, or just above 50, maybe towards 60, I think that's your chance to sell on this chart, because I think it is going lower. A rally back into resistance would be a chance to sell. So that's what I'm looking for today. Obviously payrolls data could have a significant impact on this chart if it comes out with any sort of serious surprise, but I think that the chances are, or certainly the technical aspects are looking as though that there is further correction in this chart back towards that target, and possibly back towards that 54.50 mark in due course. So I wish you good luck in your trading, and I'll speak to you later. Thank you.